Hi, this is Brent with Trade Therapy. Welcome to the Trading Couch. We are talking about Tesla. This particular chart was selected by StockTwits as their chart of the day on Friday, and for good reason. Tesla was part of our top-down analysis for RK in our Clarity Spotlight last week. The good reason why this was selected is because there's a lot of institutional strategy going on, a great setup, a great story. Most traders miss this. Most traders and most retail investors believed that this was distribution. They believed that this was going to continue rolling over and that Tesla was on its way to much lower prices. And the structure, the volume, and the institutional positioning really said otherwise. So let's get into it. Let's talk about what was really happening behind the headlines. This chart had everyone confused. The choppy price behavior, the decline in sentiment, the constant negative headlines about Elon and about Tesla left everyone very confused, wondering what was going on and what was going to happen to Tesla. But if you look a little closer, you get your head out of the headlines and look at the data, really pretty clear what just happened. Wall Street just took profit. You can see leading into that period of negativity, that negative campaign against Tesla, volume rising at the peaks, and that's Wall Street taking profit off of the table. You can see that this is a completion of an impulsive structure right here. And they took profit leading into the negative headlines and the negative sentiment and the supply that they dumped onto the market to force prices down when they then turned and began accumulating at the bottoms. So all of the traders and the retail investment community that saw this as distribution, what it actually was reaccumulation after a profit taking period, the acceleration off of the lows, the fades on the pullbacks are really, these are obvious signs that we see a bull pennant structure forming right here as Wall Street broke out of their low right here. You saw volume increasing, the lower price got. As they broke out, they hit the 200-day exponential moving average where the bull pennant formed, the red 55-day exponential moving average crossing the 200-day exponential moving average. As price breaks out of this bull pennant structure, very bullish. Their initial leg of this campaign hit the 618 Fibonacci level. This is where professional money institutions, Wall Street, typically take their first round of profit. That's what they did. They back tested this bull pennant level breakout, volume stepping in and supporting that and pushing up into another bull pennant formation here. This chart is from July 19th. This was all very bullish signals. This was not distribution. It was accumulation. This is not exit volume here. This is just run-of-the-mill profit taking, run-of-the-mill business as usual for Wall Street. They're in the business of using the media to trick people into selling them their shares with negative headlines, negative sentiment. Never really seen one as strong as this one against Tesla, but I think there's a reason for that. There are very high expectations of Robotaxi and Optimus, probably two of the most impactful products being brought to market that will improve the general quality of life for a lot of people. So Wall Street wants as much of this as they can get. In this campaign and the strategy execution, perfect example of that. We jump over to the weekly time frame. We can see on a clean long-term weekly, the structural confirmation. We see that this negative campaign after the profit taking that had just occurred was supported on volume right at the 200-week exponential moving average. You can see that this completed a series of higher lows and higher highs. You see this as a completion of this impulsive structure right here. That was wave one for us in the previous chart. Wall Street took profit, reloaded their positions. Volume is increasing and supporting this breakout. There's now another bull pennant formation on a higher time frame, which we believe will lead to the next leg of this impulsive structure. If this was wave one, we expect this to be wave two, and we're leading into wave three here, which should propel price off of this moving average cluster right here, this volume shelf right here is a very large institutional base. The way that professional money protects these large positions like this is they move price away from it so that they can protect their investment in here, begin to take profits and begin to reap the benefits of taking such a large position right here. So that's institutional strategy behind what's actually going on. The headlines will tell you what they need you to hear to convince you to do what they want you to do. If you've been burned buying breakouts, this is your wake up call. If you can't read charts like this, you need to be reading clarity. You need to be reading our content. We break these setups down every week. So head over to our website. You'll see a link and a scan momentarily. That's all we've got for Tesla this week. We'll see you next week.